What's up guys, it's Michael here. In this video, we're going to cover the new EV tax credit that is currently being presented by the current president. So as you have heard on major news articles and many other news articles that this EV tax credit is now going to be rolled out for $7,500 for anyone getting anything that has to do with EV in their name. So you're looking at PHEV, so plug-in hybrid electrical vehicles, a FCEV, fuel cell electrical vehicles, and the straight up electrical vehicles itself. So everyone must be thinking, oh my god, you get a tax credit for $7,500. But you had forgot, there's one thing that a lot of people forgot, that this is America. So like, for example, our nutrition labels or our disclaimers, there's a very fine print that's written on the label. It's so tiny that you guys have to get a magnifying glass just to look for it. And it'll say that this only applies to certain EV vehicles in this case. So since they have a fine print, and a lot of people, let's be honest, don't read the fine print, let me just summarize it. So the $7,500 for the EV credit for purchase of a new vehicle goes as follows. So $55,000 or under for passenger vehicles, meaning four-door sedans, two-door coupes, and those are categorized as passenger vehicles. So $55,000 for anything that looks like a low-slung sports car, sports sedan. So cannot pass that price. And for the other bracket is $80,000 for any vehicle that is considered an SUV, pickup truck, vans, anything that's considered high off the ground, big in size, big in width. Those type of vehicles qualify up to $80,000. And you must be thinking, Michael, this is perfect. This qualifies for almost all Teslas and almost every other vehicles. Here's the catch. Just like the nutrition label and the disclaimers that a lot of advertisements put, extra fine print, if you read, this is a couple things that was written in this plan that a lot of people don't know about the EV credit. The EV credit, the most blatant one, that restricts you from claiming it, besides the state, because it's state and federal. State, it's kind of whatever to give you that credit, but federal is more strict in this case. So what makes it more strict is for the $55,000 and the $80,000 credit. To get that $7,500 credit, the vehicle manufacturer must meet these certain requirements. Number one, it must be manufactured or assembled in USA, because we're talking about an EV tax credit being assembled in USA, so it must be USA assembly and made. So that's a really broad question. Assembly and made. What part of the car has to be assembled here? What part of the car has to be made here? That's a question to be asked on whether or not the SEC, when it goes take a look how the model is made or the specific vehicle is made it made here or is assembled other places, or does it have to be the whole entire car has to be assembled here? For example, you look at Tesla. What car actually is manufactured and assembled here? The Tesla Model 3. The Model 3 currently, in the Model 3, keep in mind, there are three base models. There's the base one, basically the standard one, and you have the long range, which they recently killed for the dumbest reasons ever, because, there's another video explaining why Tesla is not really solving the problem for traffic. And number, I believe, 3 is the performance. So if it's looking at $55,000, does that include sales price? Does it include taxes? So they didn't really specify, but doing my research is it does not include those two. It does not include taxes or sales price. So whatever MSRP they were asking for. So the standard Tesla Model 3 is about $47,000, give or take about right now from creating this video. So that we want to qualify. The long range and the performance do not qualify for that EV tax credit. How about the Model Y? So the Model S and X definitely will not qualify. Way too expensive, which makes sense. But, sadly, it's government taxpayers' money. And honestly, I think all of those cars should qualify. But does the Model Y qualify? Most likely, if it's in an $80,000 bracket range, yes. All three models should qualify, except there's another takeaway. So if the Model Y is assembled in the United States, that qualifies it, right? But no. Because if Model Y qualify, why doesn't, let's say, the Mustang Mach-E, the Ford F-150 Lightning, you can look at VW's ID4, why didn't they qualify? So besides being assembled in the United States, what's the other one? This is the one that's very difficult. components, especially battery components made using countries are not sanctioned, meaning they're gonna look at for the first time. SEC's actually do their due diligence. Hopefully, they're gonna look at where the battery materials are being made and manufactured. So you make a battery, you can assemble it here, but where are the materials being made? Where are the components like cobalt, lithium? You can use iron, you can use phosphate, whatever type of material they want to use. Where is it being transported from? Are they taking it from DRC, the Democratic Republic of Congo, which is 70% owned by Chinese mining companies, and we can go on a political route there, but you get the point. So those type of places are permanently restricted. Those will not qualify for the EV tax credit. So if that's the case, then you can't use that type of battery. If you can assemble it all in the United States, including battery, frame, vehicle, electronics, components can be assembled in the United States, but when your materials coming in is from sources that do not meet that qualifying part, which is in the disclaimer, you are not incentivized for an EV tax credit. So that's a bummer there. So technically, the only known vehicle that's currently qualified is only the Tesla Model 3 standard range. Model Y is still some complications because you can have the Texas plant that's producing Model Y, but where is the battery coming from? Is it from Giga Nevada? Is it from Shanghai? You don't know where. It can come from there, but what the materials are used are being made. That's another question that the SEC has to go figure it out. Applying for the rules and regulations. You look at VW, you look at Ford F-150 Lightning, you look at Chevy, BMW, Audi, where are those being manufactured? So most likely BMW, based on the price, like the i4, mostly will not qualify because BMW is mainly manufactured in Europe, in Germany, for the home country, because they won't open a plant here. Mercedes-Benz, EQE, EQS, way too expensive. Mostly will not qualify at all. And you look at Tesla's Model S and X, too expensive. There's a gap for it. And the Hummer EV, the Bentley Bentayga hybrid. But the ones that do qualify, well, I believe Toyota has a Prius PHEV. So the Prius might qualify. If I remember correctly, they do have a plant here. I'm not sure it's making Priuses because manufacturers have a lot of different cars on the lineup and they manufacture in different places. Like, for example, Tesla can create the Model 3 in like California, Texas, or Nevada. But the other parts, the other different brands, like, for example, their Model S and X can be developed in, let's make a place up, let's say Germany, their Germany plant. So it could be made there. So there's a lot of complications. It's a lot of complications, and the supply chain issue from doing that makes it really difficult because based on how this rules and regulation was created for the EV tax credit. So another thing you got to keep in mind is not everyone qualifies for the EV tax credit. This one will not really apply for, I'm going to say at least 95 to 97% of people. The third rule and regulation is this only qualifies for anyone who is filing single, making $150,000 or less, qualify for this tax EV incentive, or if you're filing jointly, meaning for two people, if you're a married couple and you file your taxes, you're making in total $300,000 or less, or you're the head of the household making less than $225,000 a year, then you'll qualify for EV tax credit. For anyone making more than that, you will not qualify. Now, here's actually a tip. For example, let's look at Warren Buffett. So they say if you make over $150,000 per person, or if you're head of house of $225K, what happens? That only applies if you are receiving income, meaning you're paying income tax. What happens? You are like really big companies, small businesses, medium business, even large business owners, because these may apply to the really big people. This is actually a special tip for them. Is what happens? You put all your write-offs into your business. You have most of your spending that's business related, and your take-home income is $80,000. So do you qualify for that EV tax write-off? Yes, you do. That's actually a trick. That's a loophole right there that I'm pretty sure almost every single presidency and whoever wrote that rule and regulations that only at make this certain amount, you only qualified, never thought of, because they probably purposely make that loophole for themselves. Let's be honest. So overall, for this EV tax credit, is it a great push forward for moving towards EV? Yes. But is there a lot of rules and regulations to be restricted? Because this term is supposed to be about a decade going forward. Because like how Tesla's Model 3 and Model Y had an EV incentive, they're going to extend that. And now they made it more difficult as most of the cars have to be manufactured and the materials have to be sourced from places that are economically viable and human friendly places to create the batteries and assemble here. I think it's a great move towards getting people to purchase electrical vehicles, but would it create a lot of problems? Definitely, yeah, because manufacturing supply chain. Because who wants to open a new EV plant in the United States when you only got to get this incentive for a certain amount of years? They got to got to crunch the numbers and see whether it pays off or not. So those are technically three main things you got to look out for when getting the EV vehicle. First, you got to look at the manufacturer, where it's created, what materials used and sourced, whether or not you qualify. So for that, you got to check with the manufacturer, check with your dealer or specialist. And number two is the cost, meaning, like I mentioned at the beginning of the video, $55,000 or under for passenger vehicles or sport utility vehicles, sports cars, and $80,000 for the rest of the vehicles. So look at SUV, crossovers, trucks, vans, pickups. So those were the $80,000 bracket. And the last one will be how much you make. But besides that, that's it for this video. And I believe the EV tax credit is going to be passing pretty soon. Something with the bill called I believe, what does Joe Biden call it? These names, even I don't remember. I think it was the Inflation Reduction Act. But take a look at it yourself. Go on Google, take a look, and do your own research. If you're planning to look into the EV market, just maybe it's going to be at a time when that bill passes, you can maybe get one for incentive. Besides the state incentives, you have the federal incentives, because there's two. You can check with your state where they give out incentives for EV vehicle, and include it in federal, you're looking almost close to $10,000 of write-offs. So that's it for this video. Please like, share, subscribe, and I'll see you guys next time.